Meantime, some of the macro cues that we're watching out for, the IIP preview for the month of June is at 0.9%. Let's get in Poonam Sani to give us a detailed breakup. Poonam.
Well, Avan, we have the ET poll estimates at 0.9% versus 2.4% in the month of May. Now, the consensus range is very wide, right from a negative output of 1% to 2.7%. Remember, the key to watch out in IIP is the trend. Meanwhile, mining and manufacturing output is expected to be muted, with manufacturing output impacted due to high interest rates and high input costs. Electricity is expected to remain healthy. Capital goods output is again expected to contract. It has contracted in the last 3 months again, and the pace of expansion in the consumer goods output is expected to be slow. In terms of the lead indicators, we saw the infra index of the core industries growing at approximately 3.6% in June. It is down in June versus the month of May. Also, another lead indicator, which is HSBC PMI, in terms of the output composite PMI, that has again been down to 54.4 in July, stating that the private sector output has grown at at a slowest pace during this month. The future outlook is very bleak in terms of IIP. Most of the economists have revised the GDP growth rate downwards due to the impact of monsoon as well as no interest rate cuts from the Reserve Bank of India.
I'm afraid we'll have to leave it there. Thanks for that analysis. Let's connect with Mr. NS Venkatesh, Head of Treasury with IDBI Bank. Mr. Venkatesh, good afternoon to you. Thank you for joining us. Let me start with a very basic question. How do you view the 10-year paper? Do you think yields are unlikely to come below 8.3, 8.4?
Today, if you had seen the trade, it has actually come down to around 8.1, 8.12, that sort of levels. Basically, I think yesterday it rallied still further from 8.25 levels to 8.14 level. I think there is a sense of a little bit of optimism in the market. The reason being that the FM has said that he will take steps for fiscal consolidation. So I think that has brought in a little bit of a cheer. Maybe the market is expecting that if fiscal consolidation happens, that will give some elbow room to the central bank for actually initiating some rate cuts. If not now, maybe going ahead in October when the inflation is also expected to come down. So I think the 10-year yields should trade anywhere between say around 8.10 to say around 8.20 levels.
Mr. Venkatesh, what also remains a big problem is most of these foreign brokerages raising the red flag, lowering the GDP estimates. Do you think that the Indian economy is currently in dire straits?
I would not put it like a dire strait. Definitely the demographics of India is still intact because it is a domestic driven economy. You have the consumption story there. So I think it is, I would say that as growth has slipped, the forecast has been revised from 7.5 to 6.5 by the central bank governor himself. So I think yes, there is a little bit of a slowdown in the growth which has happened. But if you look at it from a relative perspective, you find that globally the growth is not going anywhere. So compared to that, as the India growth story, I think is relatively better off.
Mr. Venkatesh, a month ago, I wouldn't say a month ago, at least 6 weeks ago, money managers were clearly betting on the short end of the curve. Now the Reserve Bank of India clearly has communicated that till the time commodity prices are high, they will prioritize inflation over growth. Do you think it's time to log out of the short end of the trade?
No, as long as if the liquidity is there, sufficient liquidity is there, which is evidenced in the market because of the LAP numbers being hardly around 47,000 crores. If liquidity is sufficiently provided, and with the, let us say, the SLR reduction to 23%, I think there will be enough liquidity in the market, which will keep the shorter end of the yield curve at the current levels only. I don't see the shorter end of the yield curve hardening to that great extent, because as we see, we actually don't see a long-term investment, long-term projects coming in. So because of that, the term loan or the term financing is not taking off. So hardly it is something like a working capital financing which is happening. So to that much extent, there will be the shorter end of the yield curve where basically the demand will be there. So I don't think it is going to unnecessarily push up the short-term yield curves.
Thanks very much, Mr. Venkatesh, for joining in with that perspective on the overall macroeconomic picture. Prakash, before we wrap up the show, any trading ideas that you've identified?
Yeah, I think more of an aggressive trade, though Nifty looks to be tired in the upper regions. Would I consider shorting it? Maybe I would if it goes up to closer to around 536070. I would short there with just a very tight stop about 10 points, 5380, and hope it comes down tomorrow. But looking tired in the upper regions. So far, still sideways.
All right, and also just monitor the stock price of Care India at the day's low. There is a murmur going about on the streets that a block deal is likely, although the management denies any such news. 327 for Care India on last count. And also all of your divestment candidates, as pointed out, given that the government is mulling the same, you've got all of them shooting up very smartly in today's session. MMTC is no exception. You've also got a Hindustan Copper, an STC, as well as a Neyveli Lignite holding up. So keep an eye out on how they pan out for the rest of the day. We're completely timed out right here on Market Sense. Goodbye from Nikunj, me and the entire team who put the show together. Markets at lunch up next.